Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The Trader Lab is available to all of you. It is a community of serious traders that have come together to understand and develop the business side of trading, develop trade plans, understand that trading is really statistical probabilities, in a 100% random environment. So the idea is not to try to create predictability, certainty, and confirmation. The idea is to understand that doesn't potentially exist here. But what does exist is a random distribution of outcomes over a large sample size that has a statistical edge. The job of developing traders in order to create sustainability, at least in my opinion, and based on my experience, which is 46 years, is to kind of understand the business they're in and not try to make it into something that they're familiar with from their outside world. The world of trading is not the world outside the door. Different rules, different behaviors, and different challenges. The largest challenge in this business is not the randomness of the market. It is understanding your business and also understanding the psychological impediments that may take you out of the business no matter what you do. So these pieces go together. Plan, statistics, or probabilities give you some tools to control the emotional triggers or chemical triggers in your brain. You need to understand elements not only of trading, but you need to, more importantly, understand the impediments that will take you out of the business no matter what you develop. That's the purpose of Trader Lab, to help you understand the business, deal with the emotional triggers and fear and randomness, which triggers the fear, of course, and potentially create a sustainable business. And again, it's available if you're visiting in YouTube. There's a link down there, and there is no cost for Trader Lab, but it is a serious community. Unlike some other things, I'm going to say is for adults. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper and give you a couple of statistics. Also, today is a really good day for us to drill into. And if you don't have time to watch this stream today or completely, be sure to review it. It's going to give you a lot in the sense of differentiating how you might view the market versus most typical retail traders. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, it's not a trade calling room here. I'm here to show you how the market works. And then if I get into real time, of course, I will do my thing and we'll discuss. Now, grab your pen and paper. In the Trader Lab, and not only is there a library of webinars, but there's also statistics, document section, glossary. So if any of this sounds foreign, and if you're not familiar with auction market theory, that is how the market works, or using chassis, the volume profile, which structured trades are overlaid on, then come to Trader Lab. You can further your understanding of market mechanics. How does it work? Why does it do what it does? And how at times we can get in alignment with it. So the condition of the market. Let's go take a look. I'm going to show you some higher, as you think of it, time frame stuff. And this is where we start. This is how you start with a trade plan. Let's look at what happened. Now, this is the breakout. I'm taking you back to day before yesterday. So we had a day before yesterday, breakout. 50 was the high of this, the all-time high, and we went down here. So this is a big consolidation, and these are all RTH candles. So, I'm out of here, and it's on sale. And then the trend, which is up, potentially, unless it falls apart, can continue. When we break out here, now this is day before yesterday. I want to show you why this is so important. These yellow lines are called volume point of control. A volume point of control, and auction market theory, just, when you hear theory, you think of Igor, right? But what it really is shopping. job of the market is to try to figure out what's too low, what's too high, and what's fair. And it takes place in all fractals or time frames. And if you're not familiar with this, of course, come to Trader Lab. You'll get a lot more in-depth understanding. And of course, you're going to have to roll your sleeves up, because if you've been trying to get the perfect fit, I'm using the term very intentionally, fit. That's called curve fitting. And I'm going to say, as we say, no bueno. So in a higher time frame, this orange line is the highest volume in all of this. When you go to the store, high volume is your retail price. You buy your mustard for $1, everybody's spending $1, high volume. But what happens if the price becomes too low? These 2 days, this yellow line, I'm in fractals now, was the fair price. If I open here and come back and check this price, and now it's too low, the valuation has changed, then what? North. If I break out of this whole consolidation, what's here? Buy stops, buyers, and new buyers, initiative behavior. This is a breakout, it's a big deal. Now what? This is the new retail price. Again, day before yesterday. What does that tell us? And we close at the high of the day. Why did the market stop here? We ran out of time. So what does that do for us? It means north. Now, the joy of trading is north by what? North by south first, north, what? This is the randomness. Now let's go a little further. This is yesterday. What happened yesterday? We gapped, we went up, found sellers, and then we came down. And where's the low of the day? It's here. What's here? Too low. Oh, it's on sale. You can't buy it here anymore, Tom. New retail price opens higher. Oh, we're going to the moon. Well, maybe not. Then what? Too low. That's the low of the day within a tick or two. Now, what I'm going to show you next is how you might, using the auction, trade this from either side. And we have traders in Trader Lab who are going to be buying this and going to the moon. Other traders in Trader Lab are going to be selling it. And I trade both sides. It doesn't matter what I do. I'm just as clueless as everybody else. But what I'm not is I'm not ignorant. Now, I have to show you no, this is the trend day. I'm sorry. So this is the scenario. Now, watch this, 54.50. And I got to take you back to the higher time frame. Now, got to make sure I got the right thing sitting here. Nope, I don't. Or maybe I do. Not sure. Here it is, 54. So this is yesterday, new retail price. And let me see if I can see what it is. It's around 80, 81 here. So what do we know? Too low. What's this? New retail price. What is this? The breakout was around 50-ish, and this is that low volume area. Where's this coming from? Here. This is also called a single. This is profile terminology. This is the highest volume, and it was the low from yesterday and the day before, fair price. So this and up. What happens? We get a negative report this morning, and what is the condition of the market? Longs are in the market, and we get the Acapulco cliff dive on the report. Now, by the way, this is yesterday. I have these out of alignment. Yesterday, we got too high up here. I got to show you this. And this is called the distribution. This is it's too high. Each one of these is an auction. In other words, too high, too low, and the high volume in a fractal is a retail price. If a store has a price, and there is some business up here, but the participants go, you know what, that's pretty high. I'm not going to pay it. Well, let's check over here. Nah, too high. I'm out of here. What about this? And this? And if we break below here, then what? South. And then we start this. Now, towards the end of the day, the volume point of control shifted down here. So the fair price for yesterday was here. This was too high. And this was the support. We hadn't gotten here yet. This is before the end of the day. And this was the low, fair price. So too high, too high, too low, and back. Next. And then we'll be ready. What, and again, what is this? Yesterday. Too low, low of the day. What's this? Too high. What was this? Too high. 84.50. Write that down. So too low. And so yesterday, and this is what gets confusing for traders. Higher time frame is up. Okay. This is support, which means you could be taking longs here, or subject to your plan, you could be taking shorts from here back to here, back to here. That's called mean reversion. It's mean. How do you trade this? Do you just take longs? Or do you take shorts and longs, or only take one side? I'm asking the question because there is no right answer. What there is possibilities and your trade plan. So for me yesterday, I was taking shorts, just trading what's called mean reversion. It's a specific plan. Other traders in Trader Lab were getting long down here for the squeeze of the shorts that are in here. Both are logical. Both are correct. There's not a wrong. There is only edge. Does that make sense? By the way, if you have questions, post them. I'll do my best. But this is all before the open. Does that make sense, guys? How are we doing in YouTube? Hope you get something from this. This is auction market theory. This is how the market works. And the idea is, I don't use indicators. And the reason I don't is I can see what's happening right here. And also based on participant behavior, which is really what this is all about. If I understand participant behavior, then I can, as quickly as possible, anticipate locations and participate at locations. And the outcome is always random. Isn't that the truth? Now let's go look at a couple levels. Now, you know we had the report, right? So what do we know? Here, start with this. 85, it's called a variable high volume node. This yellow line was this is the ETH over here, okay? This was the retail price in the ETH. In other words, oh, it's wonderful, we're going around. And there's something out here called the low volume node right here. So I mark it. ETH, or Globex, around 75. So this is an outside edge. This is the retail price. And then we have the ETH high there, okay? Which is a target. Over a 90% probability we take out either ETH high or low. Who knows? Yesterday's low, okay? Yesterday's naked volume point of control. Retail price. Let me give you the probabilities for that, and then I'm going to talk a little further. So getting to the overnight volume point of control, which turns out to be this, because it shifts down, which says too high. This is now the fair price. Remember, high volume, there's your can of tuna. What does it mean? Well, there's about an 80%-ish probability, past performance not indicative of future results, to go there. All right. There is yesterday's low or high, about an 82%-ish probability. And it could be a bit higher, but let's say minimum 82% probability to take out either the previous day's high or low. So we got this, and then we have this thing called a single, which was that higher time frame price, 54. Down here. Now, and it's that low volume node. Now, let's go a little further. Where is now we get the report. This is pre-RTH. I got to give you a little more. I'm forgetting some stuff here. We have a 68% probability of going there. Look, we're going to open there. It's terrible. And that's 68%, 66%-ish probability to take out the first hour's high. Okay. So that's enough to get started, right? Now, what do we know under yesterday's low? There's stops. That was where the longs were yesterday, right? So what's under here? Stops. What is this from the ETH? This is the fair price. What is this from the ETH? The ETH low, but where did it go? Here's how you put the pieces together. This is what makes the auction so powerful. 54. And where is it in another way to look at this? Whoop, wrong one. Let me make sure. 54. You see, this is all before the open. It's all there. So this is how the auction works. And now I've got my levels. We get the report and we get the Acapulco cliff dive. Where does it go? Here. What will we do in the ETH subject to your plan? Shorts or nothing. Maybe you sleep late and or you get in the Barca Lounger and you're not doing anything. But now in the Trader Lab, we have a level and we see that maybe since we tested a key location, that maybe this is too low. This now, and this is still prior to RTH open, is the new retail price. Our can of tuna is here. Now the question becomes, is this too low? Well, it's at a location, Tom. All right. What about this? Well, I don't know. Let's find out. Here's yesterday's low. We know there's stops under here, right? If you're hanging out long, what are you doing? Where's the eject button? Maybe. So let's look at what happens here. We get our RTH open. And 75 from the ETH, let me come back right here, is a dividing line between these distributions. What's a distribution? It's an auction. I'm not paying that. Yeah, but it's on sale. Retail. So fair price. And the job of the auction is to figure out what's too high, what's too low, what's fair. And we don't know. You know? I don't know. So that's what the price discovery process or the auction is all about. So let's look. Now, RTH open. What is this? Liquidity. Selling icebergs. And this has a high probability. Don't forget, we already got that. So let's look at the behavior. Now I'm going to go into microstructure. And again, this is just, I'm only sharing what you can develop, not what to do. This is an advanced process right here. The reason it's advanced is we just have our RTH open. We're in here now 2 minutes. So what I have is, and the market can do anything. You know, this is part of the thrill, right? Let me just check something here. Yeah. We know this was an important price from yesterday because it was our target coming down and the location for potential longs, if that's your thing. You remember, for me, I was trading shorts into this. So it's all okay. It's just a trade plan. Liquidity comes in the book. I see my sellers. I have my sellers here. This yellow line is same as the other yellow lines I was showing you at the top of the stream, the retail price. But when you get into real time, this price or auction is dynamic. It's happening here. So I get the open. What's it going to do? I don't know. And there's my new retail price. Two possibilities, up or down. All right. What about this? Liquidity. Let's just mark this for the moment and let's see what it does. We also have something called value area low. So what I'm doing is I'm opening on the edge of value. I'm opening right around that key price from yesterday. I'm opening at yesterday's low. And what's under yesterday's low? Stops. And what might be too low? Well, there's the retail price. So in the developing time frame, retail price. And if it's too high, what do the shoppers do? They leave the store and they potentially come back to what the last retail price was that might be, underlined, might, too low. Let's watch. Now, this is right here is not a trade for developing traders. I always say you can learn to read this, but you should process it mentally. The problem with this trade for developing, and I just want to know why I don't recommend it until you have everything else under control and you're consistent, you're profitable, and you manage your emotional states, is because of the speed and because you have no structure right here. You're really using something, it's like walking on parchment paper, because all you have is this, the ETH, and now this is developing. There's nothing going on here. So that creates more risk, more volatility, and you need to have excellent skills to operate in this. So let's take a look at this. Sellers are here. Break, test, mid, and VWAP. And remember, what's my probability to get to the overnight volume point of control? You wrote it down. It's about 81%-ish to get there. So if I take a short and I have this, let's just look at it. I'm going for this, and who knows? Let's just watch. VPOC migration. Now I'm going to start showing you, again, this is more advanced, and I'm not suggesting anybody does this. The reason I do this is to kind of show you that there's method. And the idea about method is not predictability, it's possibilities. And the better term is probability. There is a probability based on an 80%-ish plus stat that I'm going to get and test the last retail price. These are the same things. This is a developing retail price. This is the last retail price. And don't forget, 54 was my outside target for the shorts from the ETH if you were on them. I'm not paying that. Oh, what's this? Absorption. Why didn't the market go up? Absorption. Selling icebergs. What happens here? Break low, new retail price. I'm not paying that. Break low. What about here? Too high. What happens here? I call this VPOC migration. What does it say? Language. Remember, indicators are Google Translate. This is happening right here, right now. Can't wait on an indicator and not interested in conflict. We have ambiguity all the time because of randomness, so why add more? Absorption. Break. What happens here? New retail price. How do I use that? Well, maybe if I'm under here, yesterday's, remember the previous retail price. If I'm outside, I test what's called the value area, different conversation, and I fall out of it too high, and this moves down too high. What am I going to do? And now it moves down too high, and where's my target? It's here. That's my target, right here. So this is your target. Now, let's talk about resist. Now, there's buyers here. You can see them. We come down again. So what do I know? Too high, too high. This is a short if it's in your plan. Up here, if it's in your plan, this is a short or it's not qualified. I'm not telling you what it is for me. I'm just saying it's up to what it is for you. And I know this was too low, and I already tested the 54. I'm going over it because you got to see the logic. Now, let's look at the long. Now, if you're short, you're going for this. How about this? Suppose, and this is where it gets really weird, and I still have to tell you a couple other pieces. Suppose you understand this and you think this is too low, and you know the last place it was an acceptable price was here, and you know 75 was the dividing point in the ETH. That's why it's sitting there. What would you do? Let me show you transition to long. Now, let's talk about the short before we go to the long. What do we know? The higher time frame is up. Can we agree? What do we know? We just got under yesterday's low and we cleaned out some of the debris. That's weak longs with sell stops. Thanks for playing. What else do we know? This is potentially too low. And now, and there's another piece I forgot. I try to run through all this. Let's talk about this. We opened out of range or in range. What's this? We opened there and there's yesterday's low. What do you think? In range, out of range? Well, I'm looking at this as out of balance because we rejected everything above and we're below this. And you'll notice there's liquidity in here. Don't forget this. So what does it mean? The market is out of balance. Is the market responsive? What does this mean? It's responsive. If you're in an uptrend, theoretically, and the market opens lower, takes out the low, and we know this might be too low. Nobody knows for sure, right? We know our 54 is an outside edge in a higher time frame, and we already got it. Is it possible that if we blow out the weak longs and we find too low, that we're going to get buyers who go, oh, it's on sale. Thanks, Tom. Well, how do I know? I don't. But here's what I know. Let me show you what I know. Most of the things I don't know. But what I know is what the participants are telling me based on what they do. I'm not using an indicator. I'm narrating the behavior of the market, and I'm continually clueless. But my job is to recognize change and to anticipate it. That's the other part of this. So this is the new retail price. Everybody see it. Too high, we're going to zero. To what? Now here, I come above it, this, but I'm below this. Here, I break low. Here, I break low. Target, going down. This and this are the same thing in different auctions, if you will, or time frames. Right here, what am I looking for it to do? Well, it's going to go to zero, right? Well, you notice the change here. I get above this retail price, and I don't know yet, and I'm above this one. What happens here? This becomes support. This, when I break high, says what? Language. Too low, too low. Where's my resistance? Wasn't this too high? What is it now? Too low. What about this one? What is it now? Too low. Where might I get long? And what does my grid sheet tell me? If we open, and this is like a price gap, and we test outside, the market is out of balance. Is the market responsive? Responsive means, oh, I'm responding. It's on sale. Thanks for the discount. Well, yes. What do? We fade this back into balance, back inside. And we watch for a bounce and a retest of the previous range and the previous value area. Where's the previous range? It's there. Where's the previous value area? It's there, value area low. Right here is a long. Why? If you understand why, you're going to be way ahead of typical retail traders that are trying to have their indicators tell them what to do. I don't have any indicators. I have information. Here's my resistance. Here's where my sellers were. What happens here? What happens here? I break. Right here is the opening swing high. If I break here, I get my stops. You see them right there. I pull back to support. I'm in value. I'm over the key level. I'm back in range. I tested too low. This is auction market theory. Shopping. You know how to shop? If it's on sale, how many do you throw in the cart? See what I mean? And now if this price is too low, what might happen? Well, the price can move higher. It just did there. And if I move away from it quickly, there's your buyers. There's your entry. Now, an opening swing high. What's at the opening swing high? Buy stops. There they are. Now what? This right here and this are the key locations. Let's just watch. And remember 75. What comes in? 75. I'm going to throw a little bracket around this. One never knows. I'm going to try to highlight structure. I do this for myself when I see key areas that I'm interested in. I'm going, well, that's interesting. What does it mean? See, in trading, and what am I doing here? This is the auction. Another way to look at the auction, variable high volume note. Another way to look at right here, by the way, chop, 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 chop. What is this? Too high, too low, fair price, break low. This is a micro short. It's not a short. It says counter rotation. What do I know? Too low. Am I going to get short? No. I'm only taking longs. Where's my locations? Here and where? Where? Here. Okay? These are structured trades. And what else? I'm inside of yesterday's range. This was the main price from yesterday. We blew out the weak guys, right? Too low. You're all with me, right? So now what? Good question. Now what? What's that? Isn't that the same thing as this? Isn't this where the long was up here? Do you see something? Right there, right there. And what are these red bubbles? What is this? Delta. What about delta? Aggressors. Oh my goodness, it's going to zero. What do I know if I get, this is absorption. Who's buying this thing? Icebergs. They're the passive guys. These are limit orders. These are market orders. Sell stops are market orders. So that's why you see a delta, red bubble. Going down? Not necessarily. There has to be a passive side. And if we're inside of the range and inside of value, how about north of the border? Now let's remember 75. This is resistance. What do we do here? We get a sweep. The sweep suggests counter rotation. Let me show you something else. What was sitting up at this LVN? Liquidity, sellers. What can happen here? We get the sweep, we can get a counter rotation. So let's just look at this and see what it does. Oh, there's your counter rotation, Tom. Huh, what a shock. And buyers are here, buyers are here. I get my sweep, wherever it was. I think I lost my place, did I? Here's the sweep. It holds support. We break high. Now we have, what was our target? Next target, 64.80. And you wrote this down. What was that probability? I'm going to say 68%. This is the Trader Lab. Now what? Well, we didn't get the ETH low. We did hit our target. So what might be the next target that I would be going for? Whoops. Value area high, ETH high, and we have something else. So there, and there. Over 90% probability to get the ETH high or low. I think we already took care of this, right? At the target down here for the shorts. This is too low. We're inside a range. We're inside a value. North. Anybody have a question? Can you see the logic? FVP? Oh, a full session volume profile. That's what it is. Sorry. Hope that makes sense. How are we doing in YouTube? Please give a like if you like this. And if you're getting something from it. And if you're interested in what's going on here, use the link in the bottom of YouTube. Visit Trader Lab. You know, it's here for you. Now, 85 is another target. Let me give you some ideas why. And it doesn't mean anything more than it's a location. This was the fair price in the ETH, if you remember, and we fell away from it. And in the ETH, it shifted down because of that report. This was now the fair price. Okay, so too high. I label it a variable high volume note. So on the way up, I've got this, I've got this, I've got that, and that. Okay, and then whatever it does, it does. I have more structured trades to show you. Now, this has a sell sweep. This is resistance, location here. That's why you would target it. Now it comes down here. Now here's something I want to point out to you that's very important. Do you see where the VWAP, the mid, and the VPOC are? This is called balance. It is a condition of the market that suggests two-sided trade potential. Now I'm working towards statistics above, but the context suggests to me rotations. So I'm aware of that. I don't know when, where, if, nothing. Not my job. I do know this was too high. So if we find too low, wherever, which was overnight VPOC, then where was the last place it was too high? There. This is from the RTH. This is from the most recent auction, the ETH and the ETH high, right? So let's just look. VPOC migration. Got to label it. You see me doing the same thing every day. You follow the stream, and you should be watching these, after the fact, just kind of the reinforce what's going on. You're going to see random rotations, and you're going to see I'm just following a plan. Now, my plan probably going to be different than yours because it's really a function of your groove, what resonates with you. Some traders are going to get long here and get back in the hammock and just go for the ETH high. Other traders might trade rotations. It's just a matter of your fractal or time frame. This is the new retail price. Okay? This is too low. Let's see how and we have an outside edge up around 85. Let's just see what it does. There's our 85. I get my VPOC migration. Going to the moon, Alice. Maybe it is. I don't know. Oh, there's my 85. Isn't that interesting to you? Why did it stop here? Well, I'm going to say, number one, nobody knows why. But if you understand market mechanics and how the auction works, last time we were here in the ETH, now this is showing everything. So this is not showing, this is just showing all the volume. So we can't reference it. But this was where the volume point of control was. In other words, the retail price, and then it flipped down here. So this is too high. Think of it like support and resistance. If I come back here, I could target this. Now let's go further. And I have liquidity comes in over here. It can skew the book. I'm good with taking a scale here or just putting my helmet on, and let's see what it does. I have over 90% probability of taking this out, and we have a structured trade at TraderLab, which I'm going to show you. And I've shared all of these. Now, what do we know? Let's come back. If we accept the concept that we're only shoppers, not predictors, shoppers, this is resistance. If I get rotation, now this is my retail price, but what is too low? It's down here. If I don't come, and I've got my mid and VWAP, and anything can happen. So we're not, and what else do I have? Remember 75 was the dividing line? What is it over here? 75 is an outside edge. This is a support area right here. And what is this? What is this? This is called the distribution. In other words, of distribution of volume. Oh, it's on sale. I'm not paying that. Yeah, but and then here's your retail price, fair price. Most of the volume is here. So think of it like fair. So buck. Oh, it's on sale, 75 cents. Buyers absorbed it. Oh, I'll take that. Up here, back at the 85. I'm not paying that. But once we get above the resistance and break above it, we now at 9:30 have something called, and this is the first hour's high, and there's over a 90% probability that we take out either the first hour's high or low. Could be either, could be both, but typically one. And the other part is, there's more statistics to this, value area high. Let me give you that one so you know why we're going these. 72% probability, and the ETH high about a 76% probability. There. So everything's pointing the barge this way. So how do I suppose I want to get long again? Or because I have this statistic open. How might I do it? We have a structured trade, and I've shared this in TraderLab. And the idea of TraderLab is not that you do what I do. I don't think anybody should do what I do. I think you should do what resonates with you after you vet it. What do we know about this? This was too high. Isn't it similar that if something becomes too low, the price changes? And if something is too high and we get above it, and I get a sweep into this liquidity, there's my sellers. This might be too low. This is called the IB continuation trade. It's a long against the 85. And what's the target? ETH high. I don't know about you. This is all right for me. And value area high, out the top, and wherever. Now it's wherever because clueless. What else? Now let's come back to what we know. Now, in Trader Lab, here's what your job is. 1, vet a trade plan, which means only take trades where you have a statistical edge. Also understand that you're in a random distribution of outcomes because the environment is random. Rotations are random. You don't control the rotations. You don't control tweets, news. You control nothing except yourself. And that's where the challenge is. The idea of Trader Lab is to help you understand the business. The business is gaming, and that's the same way casinos operate. They're in the gaming business. So are we. So what do? They only play games with an edge. You got to know where your edge is. Otherwise, you're sitting with the gamblers. I kind of think it's better to sit with the house. What do you think? How do you become the house and not sit with the gamblers? Even though, just like the casinos, you are going to pay the gamblers. We all do. But if you have an edge over a random distribution of outcomes, you have the opportunity to extract the dollars if you execute the plan. And that means you got to manage the lunatic under the hood, fight and flight, FOMO, all the stuff, needing confirmation. And psychology here is your biggest obstacle, believe me. So what do we see here? A sweep. What does a sweep suggest? What does a sweep suggest? Here, counter rotation. Where does it go? Well, it comes to our long. Say Laguerre, comes to our location. Here, this is the long. Once these stats are cleaned out, I have nothing left to do on the longs. What do I see here? I see a sweep. What else does it tell me? Potential short or exit. And I'd say potentially because this is trade plan specific. Now we have another trade in the Trader Lab. This is actually, and I pointed this out in the Trader Lab, and these are not mechanical. I want you to understand. Depending on your plan, you could be done. Finito. Nothing left to do. Here's the hint. Where's the retail price? It's here. Where's the VWAP in the mid? It's here. We are not trending. We are rotational. This sets up a short, advanced, not a recommendation. The actual structured trade would be under here or back in here. It could be any of these. This skews the book. So right here, this is a trade management opportunity, or you have your stop under here. When you break here, your goal is to come here. So let's look at the potential short. And again, not recommendations. You got to vet everything. Here, let me get this thing back here. What is this? Let's just come back. Now, let's assume that you didn't take the short. This is a short here, but let me show it to you. I guess I should. Here, you're asleep at the switch. What's going on? This comes in. You see the reaction. This is how order flow can help you. This guy has no interest in trading. He's pushing, or she is pushing, skewing the book. This is pulled. This is done. This is done. There's nothing here. Okay. These are buy stops. And now I got my icebergs. There's the sweep. This is a potential counter rotation. So was that. What's the difference? Stat was still open. No short. Stat fulfilled. Maybe short. Now let's talk again. Here, what's this? Sellers are here. Buyers are here. This is microstructure. This, I'm taking you down in time frame as you think of it. I don't use the clock, so I have no time frame. But you might. I don't know. Not my job. Let's look at microstructure. I want to show you how to read in real time what's happening. And by the way, what's happening in real time is only clear after we have a trigger. So when it's doing this, I have no clue. So don't think I know. I don't know. But what I know is what it says. Language. This is what your indicators are. They're just translators, but they're very poor at it because they're not aware of the condition of the market. They just follow some derivative of price. Let me show you fractals now. Now, I use fractals for triggers, and I use them because the market is always auctioning. In other words, what is this? Is this, see this little volume right in here? I'm just going to point it out to you. See this? Break high. What is this? There's a retail price in this little convenience store. Right here, it's too low. Break high. So I have a trigger. I have a test. I have a trigger. And there it goes. All right, going to the moon, right? What do I get up here? Sweep. Notice I had a sweep here. That gives me my counter rotation. I get the opposite sweep here. It gives me my long. This is advanced. You learn it in TraderLab. I get the sweep here. I get the sweep. Where are we going? I don't know. What's in here? Micro high volume. Let me show you. Let me try to show you. Okay. The volume is this little node. When I break below the buyers here, it's a trigger. Okay? Right here. It runs here. It pauses. I'm now underneath the ETH high. I may have an excess, and these guys come in the book. This helps me. Now, I do what? Sellers are here. No clue. Sellers are here. My buyers are here, and my right here is my fair price. If I can't get back above here and here, I can go south. If I break here, this is my VPOC. What this is a fractal of what that is. This is for the whole day. This is the highest volume. And in this little store, I think of it like shopping, so there's stores. Convenience store down the street. You know how it is. Oh, I got to have my ice cream. And this is the retail price. If this is too high, and I know this is too high, the buyers were here, they're under the bus. Now I get buyers here, there's the iceberg. Sellers, there's the iceberg. Break here, all these, this is absorption. All these are potential shorts. There's the volume. Same thing you saw up there. I'm falling out of these little distributions. This distribution is the same as the whole day, except it's fractal. Then, if the market's in balance, where's my target? It's there. And then, where's my next target? On the opposite side, the LVN. Out here. And this. Let's look. VPOC migration. Too high. I haven't seen any of this, so let's see what it's doing. So I just narrate. I wait for triggers. I read order flow. I have my trades. And the thing about my trades is I know where they will show up. I don't go, what should I do? I'm always going to ask myself, in other words, the psychology says, let's be sure. I'm afraid of loss and risk. I had to find something to help me manage my emotional triggers. In other words, fight and flight, fear. We all got the same issues. Don't worry about it. If you want to be in this business, you're going to have to learn about yourself and what are the chemical processes in your brain that are taking place that disrupt your intention. Oh, I'm not going to bail out. I promise I won't do it this time. And you do. Have you ever thought about why? It's because you're wired to avoid risk. In other words, this primal wiring. And it's if you don't study and really understand the mechanisms that are at work, you can just keep doing the same thing. It's not willpower. It isn't. There's much more to it, but you can learn it. So what do I know? This now is the retail price. My target coming down was just to come down here, right here. Trade is over. From wherever you got in, you got in. The IBF, by the way, I didn't mention this. So you could take the short up here, and this is a structured trade against this. And these are in the 60 PDFs I share. And it's right here. Let me line it up for you so you can see it. if you're in Trader Lab, you already are looking at this. You're going, oh, well, I can't sell that unless it's in your plan. Where's my structured trade? Remember, we had a long structured trade over here to the ETH high. This is a, right at that 85, right? Right here. Long, structured trade. If you vet it, you have an edge, you're in. And then you're scaled in trade management, whatever your thing is. Break here, too high. Where's our structured trade? Here. These are shorts in the Trader Lab. Where to? There and out here. Think of it like shopping. If I find too high here, I got this. That's my scale. That's the reversion. And then where's the outside edge? It's out here. Oh, it's on sale. Retail, too high. See how it works? Rotations. So I trade to here. And what do we know about down here? You remember this? Where's this from? Value area low. What's this? Yesterday's low. What's this? Key price, right? Too low. Now what? New retail price. Here's the possibilities. There, and we're falling out, and everybody runs for the bunker, or I get my sweep, I get my VPOC migration. It's either this or this. If it's this, then where's the last place? It is too high. It was there, isn't it? See? And where to? Where's my support? Isn't it still here? And isn't my variable high volume node here? But let's assume, and we're going to assume, that we don't know. What I know is too high, retail, going to zero, if and key level here, too low and too low below. If I come up here, if it's too high, and I have to look at my order flow, there's a few other pieces. Let's look at the order flow. What happens over here? My sellers. What happened over here? This was support. Support becomes resistance. Retail, same concept. Retail price too high becomes resistance. Retail price too low becomes support. Back to the retail price becomes resistance or not. And of course, it can do whatever it's going to do. If I get a selling scenario here, a trigger, I can sell this. I can lean against this. I have structure here. Not saying this is your thing. I'm just saying it's a thing. Liquidity in the book. Location, location, real estate. Location, location. Potential short, and you're going here. And if you get down here, you're looking here or lower, whatever. Not my job. What's this? Retail price. Where's resistance? Up here. Where's support? Sweep. What is this? Where'd I go? Variable high volume node. I don't know. Too low. Who knew? Now, sweep. What do we see with these sweeps? If I get a sweep up at a high, I can get a reversal. If I get a sweep down in here, I can get a reversal. That's what I know. What else do I know? Retail price. It was too low here. This is too high. What can happen? If I can go here, I can bounce off here and continue. But this might still be too low. I don't know. If I hold support, here's the sweep, and I don't go down, I get across here, I can come back here and maybe up here. And it doesn't mean I should be trading. It just means this is what it can do. Anyway, this is structured trading. Sweep, micro high volume structure. This is like your VPOC in a fractal. Break high, trigger, support, go up in time frame, resistance, get through here, or not, or just out here. Don't know. Are you guys with me? Hope you're getting something out of this. Sorry for the, but I really need to share this with you. Tim in Trader Lab is asking, do I clear all VHN? VHVN. Yes, I do. The only time I keep them on the chart is if they were a material event, like what happened in the ETH. That one meant something because it was the most recent auction. I do look at high volume areas, and I like this. This I'm going to keep on the chart, and I do move them around and drop them off once they don't become material. You know, I do keep track of them because it's all part of the story. This is from the ETH, so that's why it was 85, was resistance coming up. And then when we broke above it and came back, it's the same as breaking, as an example, like here, to potentially come back here. It's the same. So when I'm coming back to a ETH location where the price was too high, it's resistance. If I get above it, I can use it as support. And now I have a trade here for a long up to the ETH high. So I'm using these structures. I don't use indicators. The reason I don't use them, what are they going to do for me? Chase price around? I don't know. They don't work for me. So I mean, and I spent years. I mean, when I mean years, I'm doing this 46 years. I'm going to tell you years. I can't remember the stuff I worked on. But I will tell you that I built trading systems also because I thought that would do indicators better because I could optimize. So all I did was the same thing most of you guys and I did early on, and that is curve fit indicators to create more certainty. Certainty doesn't exist here. So how can you create certainty in an environment where it doesn't exist? How about you can't? Well, if you can't create certainty, you got to create something, right? Ben, mean reversion is outside in, but it's fractal. So the mean, there's a mean in here. This is a mean. That's a mean. So right now, this is the fair price. So what the market can do is just rotate outside and come back to it. What you don't know with the mean reversion is where's the outside. But here's what I know. This was too high. This is the fair price. If this here is too low, I can revert to here and potentially out here. And then I can come back. I can do it, whatever it does, it does. So I don't know what the market will do. So it's not my job. My job is to attempt alignment, get risk neutral, and then I'm as curious as everybody else. What's it going to do? I do understand what creates the levels. I don't know if now we're not coming back here to test it. You see, this might be it right here, and we're not coming back, and now we fall out the bottom. That part, I don't know. I do know that this was too low. Now, if we come under here, we're going to take these longs out. That's all I know. So we'll watch it here. Do the buyers come back in here? And where it's too low, let's go to fractals. Show you a little idea. This was too low. It's this node sitting out here. In the ETH, this was the retail price, and so far it's too low. This is the current low of the day, right? So I know there's stops under here. I'm going to throw that in there so we don't fall asleep. And we may still have found too low, and if I'm in balance, I can keep coming back to the mean. Now, and we call it mean reversion because, yeah, it's mean. Who knows? I don't know. If somebody says, what's the market going to do? My best answer is, I don't know. Because I have to say that because if I think I know, I'm closing my mind off because the mind will tend to filter out and only see what it wants to see because of the ego, the need to be right. Well, I know the market is random, so I can't predict. What I do is I narrate and I understand what language is. This is a foreign language. You guys use indicators to translate it. That's fine. But what happens, and what most of us do, is, well, let's put 4 or 5 indicators together because more is better. Now, the problem is if they're not all active and engaged at the same time, and it's random, a little of this, a little of that, you're making a buffet of indicators. Now you have random inputs in a random environment. That's garbage. That is not sustainable. It is just gambling. The casinos don't change the games. Yeah, you know what? We paid somebody last hand. In blackjack, let's put 10 cards out this time. Maybe that'll be better. You know, it doesn't. They don't change the game. So the idea is to know where your trades are and have defined the behavior. This behavior here is suggesting to there. This is support. Up here is resistance. If I get too high, this now is resistance. This is support. So I want to see what it does here. If it comes out and keeps going, then we can come here and take out the low of the day. It could do it. And here's the other thing it can do. It can come under here and then come back inside. That would be something called a neutral day. And what a neutral, and there's about a 29-30% probability we'll get under it. And it can just come down and come in, or come down and do the Acapulco cliff dive. I have no opinion. I just attempt to align. So my opinion isn't worth anything because it just isn't part of trading. The business of trading is an alignment business. So Ben, you're asking me about mean reversion. Yeah, this is all mean reversion. Mean reversion is the fundamental function of the market to check prices. Here we had a sweep. That suggests potential reversal. Here we had absorption. Look at the, here, buyers, and we break high. So now what do we know? The sellers were here. That's what caused this. The buyers are here, and there's the sweep. That created that. So where is my retail price? It's there. That sets up a long, if it's in your plan, to there, and then up top. And we're in balance, so it's two-sided trade. Where's my support? Isn't it there? That's my retail price. What do we know about the VWAP and this outside edge? What do retail traders do? This isn't about being right or wrong. They put their stops here, right? Now, if we come out here, we can anticipate selling here to come mean reversion to come back here, assuming we get above this. If we don't get above here, then we can do the Acapulco cliff dive. That's why if you're getting long, you need enough range to get your risk off. This trade is reversion trading. It's a specific plan and a plan. Now, you could be taking longs, you could be taking shorts, you could be in your Barca lounger. You don't have to be trading, you know. It just depends where your trades are. And in Trader Lab, the job is really knowing where your trades are going to be. I'm not sitting here going, oh, what should I do? I'm sitting here going, well, I know what happened here. I know the condition of the market. I know it's two-sided trade, and that means everybody, it's up for grabs. Everybody can get equally abused. I know that this is too high. If I can get over these guys, the VWAP, this is my in the mid, where the stops are, then I can come here. If I can't get back above this, and I get below here, then we can continue lower. Those are the things I know. After that, random. So let's see what it does. Are you guys tracking? I hope you're getting something out of this. And then it's all mean reversion. Do I use CVD, NH? I don't. I don't use CVD because for me, it's a lagging input. I use the delta. In other words, when I look at this gives me what I need to know. If I see the buy delta, which is aggressors, and who are aggressors again? Buyers, of course, and buy stops, that's stops. So they come out as delta, buying delta. Well, what happens now? Where's my buyers? What do I see? No, where's the buyers here? Is that the best you got? Now the sellers take over. So this sets up microstructure. Right here is a micro HVN. Now I'm showing you triggers. I'm not showing you trades. If this is located at a location, see, it's location. This is a short, but the target would be to there. I don't trade this. I can't trade this. Because of range, not because I can't trade it. But because I don't get in here. I can't sell this. I need a trigger. Now I know is my buyers were here and my high volume is there. So it's like a VPOC in a microstructure. Trigger, pullback, stop would be here. This is the target. So it doesn't qualify, but the auction doesn't care about the range. We do, right? And then where's my support on the other side? Same exact thing from the other side. The buyers are here. So I got the buyers here. I got the sellers here. And what else do I have? Buy stops here, here, mid, VWAP. And what was too high? This. So if I break this apart, I could be trading these rotations if it qualifies and I have a vetted plan. You can learn this. Not saying, this anybody should do this, but if you could do pieces of it and you just waited for the trades that you knew for you, that you had vetted and had an edge, and then you're hanging out. You're just sitting here, you're waiting for a bus. Where's my bus? Well, my bus is here. My resistance is here, and my stops are here. If I'm in balance, which I am at the moment, I am not selling the VWAP in the mid. Not a recommendation. It might be the trade of the century. What I am doing is looking to come across because I'm in two-sided trade. Now, if I can't get back above this, then I can, just keep doing this. I don't know what it's going to do. Here's my resistance, you see? Where is it? There, because that's where my sellers are. I have to get above this. I don't know. So outside, and here's what it looks like. Reversion trading, here to here to here. If I fall out, then we can get under here. If I come under here, now remember the short, I called it an IBF, IB failure. If I come under here and I run out of sellers, and all I'm doing is taking the inventory, and I see buying, I can now revert and come back across to this. It's not a recommendation. It's a possibility. Now, where's my support? Let's remember here. Where's my outside edge? Here. If I clear this, I got this. If I don't clear this, I got this. That's what I know. I can't know anything more than that. Now, maybe you do. Come to Trader Lab, clue me in, because I've never predicted anything. So I don't use CVD, NH. I use Delta. Because what I want to see is if I get aggressors and then I have buyers here, look where we are. What do I see here versus there? You know what this is? Delta divergence. So yeah, is that CVD? Well, not this. Look at the CVD. It's just red. I don't know what to do with that. Now, if it works for you, that's great. Sellers come back in. Notice the movement. So when I'm getting the buyers, I'm not really getting the movement. Here I have the buyers. And we'll look at the sellers. They're still fairly dominant in here. So to me, if I can't clear this right here because of the absorption, then we can, come down. So I've got resistance, I got support. And right now, the sellers seem to be having their way. And it could do anything, right? So that's it. So support, two-sided trade. If you aren't patient in this is called mean reversion, underlining the term mean. You got to be trading outside. If you trade in here, you're in trouble because this is now the fair price. What do we want to do as shoppers? I want to buy low. And what do I want to do if I'm a seller? I want to sell high. What about retail? I'll leave that for somebody else. What happens at a fair price? Chop. I don't trade in the middle. In this context, I trade outside edges. And I don't know where the outside edge is. That adds the excitement. But what do I know? I know that's too high. I know I got stops here and here. So if I'm in two-sided trade, I'm just working into the stops if I can clear this. If I don't get above here, then I can fall down here. That's what I know. So if I have a trade somewhere, then I got to get risk neutral. Job number one, risk management, and then hang out. And either it works or I scratch or I take a full stop. Then I have a trade management process. When you're in this will drive you nuts because in rotations, FOMO is a big part of what you're going to run into. Oh, because hindsight, it's clear. Oh, I should have got long here. Gee, I should have got out there. Oh, look, it's coming down. I'm going to bail out. And what happens? Comes back up. You need to have a plan that is specific. And I always recommend in Trader Lab that traders build like a book. You know, like, oh, I'm trading mean reversion. I open it up. I got screenshots of mean reversion. I have bullet points that say, don't trade in the middle. It says outside in only. It says the issue with mean reversion is where's the real outside edge. Wait for structure. Wait for triggers. It must fit your risk parameters for getting risk neutral. If not, the trade does not qualify. Manage FOMO. You're going to be more susceptible because of these rotations. That's what's in my plan for balance, as this is called. Then, where's my targeting? Well, if it's outside, I'm trading outside edges, and those are swings in different fractals and time frames. When I pointed out the target, this is a swing in a higher time frame. So I'm trading into outside edges in multiple time frames. That'll drive you nuts because it's what are we trading? We're trading all of it. A way to think about time frames, it's a vertical integration of fractals. Now, a time frame is rigid. 5 minutes, 2 minutes, one, pick one. Who knows? Doesn't matter. What matters here is this is not on the clock. This is on the behavior of the participant. So for me, I don't have time. I have structure. So that's why I call it structured trading. What's the structure? Outside edge. Buyers were here. There was absorption. Now, here's the question for this astute group of traders. If the buyers came for it here, and we know there was a sweep, and this might be too low, and this is the current retail price, okay, might these buyers buy it over here? Oh, it's back on sale. Give me some more catch-up. And here, why didn't it go down here? Because the buyers are now here. That's absorption. This is the retail price. What do I know up here? Why didn't you see the green delta? Sellers are there. So I got sellers and buyers. It's bracketed. So which way is it going to go? Good luck with that. I can't tell you. I'm below the VWAP and I'm below the mid. And this is too high. All I know about this trade at the moment is if I can clear this outside edge, I can go here. If I can't and I break down, I can get under here. And then if I do get under here and I have no traction other than an inventory grab, then I'm going to look for it to come back inside. It's the same trade from the top, except it would be from the bottom, called the IBF. And that's based on what's called a neutral day. Again, market profilage. This is based on the auction. Neutral day means nobody's really in control. It's just sloshing back and forth. It's like a standoff. Sellers on the top and maybe buyers on the bottom, or not. Or we fall out and everybody runs for the bunker, which at the moment, if we're running for the bunker, it wouldn't be just floating around like this. It would be the Acapulco cliff dive. So the possibility, not a recommendation, is if we get under the IB low, which is this, we come out and we come back. That's the possibility. It's not a recommendation. Right now, this is our support. But this is real crummy because you got no range. The only way this trade really, right now, can get legs is it has to come across, and then you'd be coming back here. So if you're taking longs, and this is not a recommendation, remember, this is support, and it can do anything. And by the way, the fact that this is here, there's also stops. Here's a couple of things to think about. Write this down. Think like a retail trader. Don't act like one. Where are their stops? Aren't they under these swings? Here, here, and here. What do you think the odds are? And I can't give you a probability that if sell stops are sitting here, that the market comes under here, and if the stops come out, the icebergs will take the other side, and then if you come back across, then you get the squeeze. And it doesn't have to. This is part of understanding market mechanics. What's on the other side of this? Well, we had our sellers here. And the buy stops are here. So you got to think from both sides. Buy stops are here. Buy stops are here. Sell stops are here. It's balance. If I can come across, now I've got what I call fuel. And if I come across and I get the fuel, that takes me potentially back into VWAP and mid. And what's the VWAP and mid? stops, what might we get at VWAP and mid? Sellers to come back here. So it's rotational trading, and if it doesn't fit, you don't do it. Or it's not in your plan. You're hanging out. You're in park. You don't have to be trading. I'm just going to tell you a little bit about me. I'm not interested in being a whirling dervish. I'm interested in limiting my risk. I limit my risk by being selective in the trades I take and trading for range, because I take stops. Does anybody ever tell you that they take a stop? Everybody takes stops. Cost of production and overhead. I mean, the casinos pay the gamblers. You don't think do you think if anyone was going to figure out how not to pay the gamblers, it might have been the casinos. Well, they pay them and give you the cocktails and the ticket to the buffet. That means they're netting out, even though they have overhead. Now we have a problem because we need to be right. We need to avoid risk. We need approval. All this is nonsense. What does that have to do? Do you think the dealer needs to get a pat on the back because he dealt the cards? What? And somebody walks out with a suitcase of cash. Does the dealer get fired? No, he just steals the next hand. Does he change the game on the next hand? Because he paid somebody. What do we do if we take a stop? We're emotionally attached. And if this is a long and we got ticked out over here, we would skip the trade because of our fear. Because every time we participate, it's a unique event. You see? But human nature is I'm emotionally attached to my stop if it was here or here, and I just got taken out, and then I don't take, if this is qualified, I'm not saying it is, then you skip the trade. Or you're emotionally attached to this stop. Oh, I got ticked out. Next time a counter rotates, I'm going to bail out. And you get out of here. Anybody here ever done that? I have. By the way, in the Trader Lab, we have something called the error cost calculator. What's that all about? Have you ever quantified the errors you make? Oh, yeah, I moved my stop. I'm going to put a sticky note up. I won't do that next time. I had enough sticky notes on my monitor that it would fall over. What happens when you're focused? All it is you and the lunatic under the hood, the primal wiring. All of a sudden, everything, it becomes like tunnel vision. You're not seeing, you're not thinking anything. You're laser focused. And where's our stops, by the way? Right? So if you're trading reversion, you're trading into the other side. So that's why it's outside in to the outside. Where's the stops? Not a recommendation. I'm just sharing ideas with you here. Now, this trade may not be your trade. It has to meet your parameters. If you were in Trader Lab, you would know the condition. You wouldn't know the outcome of any trade. But would it be better if you knew, potentially, and that's all you got, maybe, that maybe we're in a two-sided rotational environment and that this is too high, and if you got outside, where's the stops? And, and you got this. So where might this trade go? It's not a recommendation. Where am I trying to go? Isn't it here? Just asking, what do you think? Ben, the triggers are what you define. The range is a trade requirement. In other words, getting risk neutral. In other words, if I'm sitting here, and maybe this is my trade, maybe it's not. I'm not, this is the trigger actually, and this is the entry. But I can look at this from different angles. But for developing traders, the discipline supersedes a trade. It's not important. There's so many trades that that I've shared in Trader Lab that there's like a smorgasbord of trades. The idea of trading, by the way, is not to be active and play a video game. We might forget this, but the idea of trading is to create a sustainable business and be profitable. That happens when elements that need to be qualified that are represented by the research you've done that show you where your edge shows up. Edge is a function of getting risk neutral and also understanding how the market works. You can learn that in TraderLab. This is the target up here. Why? And now we have to be aware that we can get mechanical retail traders who are going to sell the VWAP for reversion back here. For me, not so much. And it doesn't mean if I got long here, this is where, well, this is the requirement for the reversion. But this is, where's the stops? This is a different plan, isn't it? Where was it too high? Isn't it here? This trade could just be from here to wherever. And if I clear this, it sets up back here. If I don't clear this, back here. That's what I know. I can't know anything else. So that's all I know. And based on what I know, I have now a plan. I have a trade management process. I know I can come right back here because this is, quote, mean reversion. But let's talk about what else we know. Stops here at the swing. It's an outside edge, right? If I get long because of why? Key. Okay? Key. This is your Ben, this is your long. What do we see happening here? Too low? What did I do here? I crossed over. Now over here, if I bought it here or here, I cross and I come down. Is this where we bail out because of fear? Here's what happens. I buy it here. Euphoria, depression, fear. Euphoria, fear. Euphoria. Oh, it's going to fail. I'm getting out. Sell the low. Has it broken? No. Psychology is the issue. Anybody can learn this if they come to TraderLab. But I'm going to say this to you. There's no plug and play. Everybody looks for, quote, setups. Oh, Tom did that. Next time it happens, I do that. No. You have to understand how the pieces fit together, and you're going to have to invest time. If you are not a profitable trader, and I'm not saying this will work for you, we have a lot of profitable traders in TraderLab, and also developing traders who are not profitable, who have decided that they don't want to keep waking up in the same place, working hard. And why doesn't it work? Have you ever asked yourself, if you're not profitable, why doesn't it work? Why are there profitable traders, but why do most retail traders fail? Anybody ever thought about it? And we think, well, and now here's the catch-22. I find this is the biggest dilemma it was for me. I always had winning trades. And I thought that all I had to do was make what I did better. It's a very logical thing. But what we don't think about is gamblers have winning hands. You have winning trades. So you, of course, want more winning trades. So the logic behind that is that, and here's, by the way, VWAP, and where's our stops? Mid. And we might get a counter rotation because of mechanical retail traders. What else do I know? This was too high. And there's a swing. If I can get above here, I can come here. If I can't get above here, I can come back here. What else do I need to know? So anyway, we all have winning trades. Hey, let's have more winning trades. Yeah. How do I get them? More of the same. What do I get? More of the same. What is that? Random winners without an edge. What does that do? You lose. So let's go make it better. Let's go make it better. Let's put more indicators together. I'll get more certainty. I'm not sure about this. I'm going to wait. I want to be sure. What is that? Fear of loss. We're all afraid. We're wired to be afraid. But if you convert this business into statistical probabilities, now you open your trade manual if you're in TraderLab, and then you're going, well, I don't know what's going to happen because I never know. I know I got a trigger here, and I know what I did here. Key, bing, bing, bing. I know what I did here. Bing, bing, bing. Too low, too low. What does that tell me? I can take shorts, I can take longs, I can still take out the current low of the day. If I did, I already know my next trade will be to get long. If I come here, it's a trigger, I have a sweep, I have all the pieces, and where am I trying to go? Here. Just saying. And it's not a recommendation. Where's my swing? Here. What does that create? Outside edge. Where else are my stops? Out here. So I can just be trading to here, into the stops, or managing it and trailing, going for here. These are structured trades. You can learn this in Trader Lab. I'm out of time, guys. Please give a like. If you're interested in this, there is no cost for Trader Lab. There is a link in the bottom of YouTube. You're all invited. By the way, target, right? Now, remember, I don't call trades. I'm just as clueless as everybody else, but I got to tell you the difference. I'm not ignorant. Thanks again, guys. Thanks for visiting Trader Lab. Please give a like on the way out. If you're interested in this, use the link in the bottom of YouTube. Visit the Trader Lab. It's a community of serious traders that have come together to leverage their collective experience. This is a structured trading process. It's based on auction market theory. How does the market work? I can assure you it's not your indicators. It works on participant behavior, and if we understand how to translate that behavior, we might be able to generate a statistical edge, and over time, if we develop the discipline and the metrics to give us the courage and confidence in our plan, instead of being managed by our fear and our emotional triggers, fight and flight and the rest of it, we can then manage ourselves and potentially create a sustainable business. It's up to you to do the work. And as always, past performance is never indicative of future results. You got to roll up your sleeves and go to work. Your choice, but you're all invited to Trader Lab. All you got to do is click the link in the bottom of YouTube. You do have to confirm your Discord username. Make sure you're not a spam-a-later. And I look forward to meeting you in Trader Lab. And thanks for visiting with me today and the Trader Lab community. Appreciate it.